Word taxes makes many people break out in a cold sweat, feeling stressed. But it doesn't have to be that way with the proper planning and the right information. In this conversation, I speak with my good friend, Tatiana Sawyer, an award-winning accountant and business turnaround advisor, about the topic of taxes and planning. And we will uncover some insights that will help all of us with our end-of-the-year planning, as well as create a strategy for the future. So stay tuned. This podcast is brought to you by DJ Works Media and HalftimeSuccess.com, offering resources and insights for those at mid-career or the halftime of life. Explore our diverse categories, including courses, coaching, health, music, software, and travel. We're here to help you make this stage of life your best ever. So get our new articles, downloads, and podcasts by signing up for weekly updates at goalsforyourlife.com/newsletter. Now, let's dive into today's episode. And I'm so happy to have Tatiana with us today. Tatiana, welcome. We are across the United States, but we get to talk to each other here on this wonderful interview. So thank you for joining us today.
Absolutely. Thanks so much for having me, Deborah.
Yeah. Well, you are very equipped in a topic that we're going to talk about today. And it's at the end of the year, as this is being released, a very important timetable. And so we're going to kind of get into that. But first of all, I like my guests to introduce their background, more of that, instead of me giving a long intro. It's because I've done so much concert work. I hate those long intros where you're waiting on the sidelines. So, but you can introduce yourself and your background just briefly, better than I can. So why don't you kind of enlighten our audience?
Sure. So I am an accountant by trade, but just so much more than an accountant. I run a boutique tax reduction and accounting firm in New York. We work with all 50 states and do some work for foreign entities and individuals in the US as well. And I love what I do. How was that for a quick intro?
That's really quick. And yes, and we met, just hit it off. And you really do have a wonderful background, but it was really fun because we had so much we were talking about in common. And I am not a numbers person, a tax person. My husband is more the numbers person, but you're a really wonderful, normal person that's not like a total geek out. It's you hide it well. I mean, for all of your experience and your expertise. So, in this wonderful smile and wonderful personality. So, and we are talking about taxes toward the end of the year. And you said that timetable is extremely important. So can you tell us why?
Yeah. So, most accountants look at taxes as something that already happened, that it is what it is kind of thing. And we are very different in that respect because we look at it from a perspective of what can we do and when should we do it so that we actually pay less tax and stay out of trouble. So we're not I'm not into, breaking the law or bending it to the point where it cannot be defended, but I am for using the US tax code to your advantage, if you will. And so the reason that it's important now is because once the year is over, there's really nothing my firm can do for people. So we don't take on once a year clients who just need their taxes done, because if they just need their taxes done, they can go to somebody else. But what we help them do is actually pay less of that tax, and that requires proactive work. So that happens throughout the year. And in my firm, we look at a tax return as the culmination of a year's worth of work, as opposed to it being the products that you offer to the clients. And so typically, October 15th through December 31st, so 2.5 months of the year, is a fairly slow time for most traditional accountants. It's actually our probably busiest time because we do a lot of tax planning for existing clients, for future clients. And the reason is that once the year is over, there's nothing we can do for them for this year anymore.
Mhm.
So except for maybe some retirement deferrals and things like that, which are not really, I mean, they're great, but they're not, there's so many more strategies out there. So that's why timeline of doing this and hearing this before the end of the year is so important.
Oh, wonderful. Wonderful, wonderful. Yeah. And pre-planning is so important. And I just spent a lot of time today, actually, as we talk, reconciling, because I'm always doing my, you have to see where the money is going, and you have to see how you're spending with marketing, with whatever else you're doing with the business. And I was doing a lot with travel, but it was, it's very, very important to watch the cash. That's a wonderful principle for all of us. So, and to be planning. I like your emphasis on your planning, which is really, really important. It takes the time that you don't think you feel like, okay, am I doing anything? You're doing a lot with the planning. So, and I want to talk just briefly too, when you don't do just separate clients with tax. So you're not dealing with a lot of extensions, and you're not dealing with all of this with sort of tax planning there. So that kind of clarifies that a little bit on that end, right?
Yeah, we don't actually do extensions. We do maybe 2 or 3 just because the clients are waiting for external K1s or something that should come from somebody else. But, I see it as double work because 6 months later, I don't remember what I did or what I thought about or what I looked at. So I have to redo the same thing. I have to re-review and everything. And so I just see it as a waste of time and not really a value. So we typically, we can definitely help and handle, and we do handle our clients' taxes and accounting, but that's not the lead product for us because, like I said, it's a culmination of a year's worth of work. Whereas, most accountants look at it as the product and the moneymaker for them.
Okay. Oh, that's interesting. Yeah. Very interesting there. So, that was good for me to hear the clarity with that. So, now with tax planning, sometimes you think about tax planning, it's just for the wealthy individuals, or, if they have a lot of different, a big portfolio or things that they're dealing with. What about, multiple stocks and investments and all of these things? So, is tax strategy different for those large businesses, or are a lot of the principles the same? I mean, I'm a lifetime entrepreneur. So there are a lot of those that are listening that are entrepreneurs or small businesses. So what would you say to those people like myself or those other small businesses that are listening?
The only real difference between the wealthy and ultra wealthy and everyone else, mid-sized small business, the only difference is in the number of advisors like me. So really, if you think about it, some of the most famous people talk about how they have all the different entities and structures and all of these things that funnel money through different channels and basically legally reduce their tax. So basically, the only difference is that they don't have one Tatiana's firm. They have maybe 5 or 6 Tatiana's firms, or maybe 10 times the firm size. And so these strategies are generally available. Let me clarify this. There's probably close to 300, 315 strategies. Not all of them apply to old businesses. We don't use all of them for sure because certain ones apply in certain circumstances. And so when you're thinking about kind of tax strategies for small businesses, U.S. tax code is built around small business. That's what the American dream was all about. It's all about small business. And there's this book called E-Myth, which is very famous, by Michael Gerber, and he talks about bringing the American dream back to small business. And I really like that because that's what the U.S. tax code is for me. It's we don't really take on people like clients who don't have a business or a real estate investment portfolio because, again, there's nothing we can do for them. Like, I can't save them money on tax. If you have a W-2 and that's it, there's nothing I can do for you to save you money on tax. I mean, and so that's why the strategies are, I don't want to say the same, because there's certain ones that are available at certain higher brackets. And again, we're back to that 300 plus strategies, but many of them, the core of them is essentially available to every small business. And the thing about it is the mindset, I think, is the most important part of it, because implementing those strategies into your business will cost money. And unfortunately, the accounting industry has become a commodity for the last 20 years. And some of these big tech firms are not helping with that image of the commodity. But by no means is my firm a commoditized service. So of course it costs a lot more, but there's always a return on investment. So you're basically paying to get more return on your money, which to me is a no-brainer, but it's not for everyone like that.
Okay. I like that. Paying to get more return on your money. I mean, a good tax person will save you money. We've known that all the way through the years with multiple different businesses. So, and to do the planning is important, and not wait till the end of the year and come with a shoebox full of things and wonder, okay, so what do I do with all of this? So, and you get the right person involved, and it will save you even more money because they do know the code. And then, let's get into that a little bit, because you have defined the taxpayer. Actually, you just haven't defined. Our country has defined the Taxpayer Bill of Rights. Now, a lot of people are probably not familiar with this at all. And in fact, I hadn't heard of it. And for years, I had no idea there was a Taxpayer Bill of Rights, because you always think, somebody's going to come knocking on your door, which we've had before. And we came out ahead, actually, but it scared me, of course, when you're being audited and you're just, you're panicked. I spent going through every single little thing. So why don't you expand on that and what that is?
So, basically, the idea is that you have to have support for everything, and it has to be the correct support. So think of money trail and paper trail, because what the IRS doesn't really like is, and I'll explain, and I can go into a little bit of a detail of how audits happen and how they get pulled up for review and stuff. But the idea is that the IRS doesn't like sham transactions. And so it doesn't like transactions that were originated or created or whatever, entered into simply with the goal of saving money on tax. So if that's the goal, it will be considered a sham transaction and ignored for tax purposes. And so the idea is that I actually got certified as a United States tax court practitioner couple of years ago. I can't remember when that happened, but the reason was not to represent people in tax court. I mean, I can as a non-attorney counsel, but the goal for me was to learn the rules of evidence, federal rules of evidence, so that as we work through clients, as we implement these strategies, we also put in the proper paper trail and money trail in place that actually supports that, and actually essentially basically cancels out the sham classification. There has to be a reason for everything, right? And if that reason is the only reason is tax savings, that's not going to work. But if there's another reason for it, if there's a logical reason for splitting up a business into separate entities because, for certain reasons, then it's a different conversation. And you can find a good reason for pretty much every strategy that I use. But yeah.
It's very, very interesting. In fact, I think we were talking through that at that point where you were going and getting that separate that license, and I was thinking, why do you need another license? Why do you need something else that you're doing? But this really explains from the other end, why I've studied copyrights, why I've gone to these, going into back. It's not like I'm not going to be an attorney. My husband says I should have been, but yeah, I don't want to do all that reading. But you have to know the law when you're even doing some of your own work. I think that's a great thing to add to your portfolio of your expertise. So, and it really does make sense. So, the Bill of Rights of just that we all have rights within this, and we know that as long as it's not a sham, that we're not doing it. You're not buying an extra insurance policy or buying an extra, all of these things to be able to just save money down the road that might be discounted by that. So, yeah.
Yeah. And then Taxpayer Bill of Rights was really put together by the IRS so that you know what your rights and responsibilities are. And everybody's more or less aware of the responsibilities, but not everyone is aware of the rights. And one of the rights, number 3, is actually that you have the right to pay the least amount of tax legally. And that's exactly what we help people do. So it's very helpful because actually a lot of times people get in trouble because they don't know that it could be resolved a different way. And that's where using a professional can actually be less costly again.
And it is worth the decrease in stress to be able to have a good professional, because that professional usually will show up for you. And you don't have to be the one showing up with all of your records and wondering what's here, what do I have? And that professional will show up for you.
Well, if you're being audited, right? And I kind of promised that I would kind of explain how the process works. And that's why we do the work the way we do work. When we do accounting for clients, for business clients or real estate or whatever, we do very detailed accounting. So we create a number of sub-accounts and we show very detailed. For example, I would never put like a $70,000 travel on the books or on the tax return because it's an immediate audit, right? The IRS wants to know how did you spend $70,000 on travel?
Yeah.
But if you put in, travel, airfare, travel, lodging, and you split it up and you break it down, then you might actually avoid an audit. And the reason is this: when your returns are processed by the IRS, they're actually analyzed by the, what are they called? Mainframes, supercomputers, whatever, that have their own logic and things like that. And when they're analyzed, sometimes let's say they see something, the computer sees something that it flags. At that point, then the return gets pulled for an internal review, for a human review, right? And that human looks at it and says, okay, what is there anything that we need to look into further? And if your tax return is done right with the proper appropriate disclosures and being forthcoming and all of those things, then the manual review goes without a trace and you never even know that you were pulled for a review. But then if you get pulled for an audit, you always want to be represented by somebody else. And the reason is this. When I go for an audit, and I just went for an audit, I think last year to the IRS office for a client, they had bad accounting because some of their accounting is done by somebody who's not trained to be an accountant or a bookkeeper. Yeah. And and I was like, yep, I know exactly why it was pulled for an audit. And so I came in and I have the ability and the liberty to say, I will check with my client and we'll get back to you. So that gives us a time buffer to think about it, to think about a proper response. And what I mean by that is, I once made a mistake many, many years ago of it was a free client. I was doing a tax return for a friend. And we went together to the audit, and
I would never want to go. Oh gosh,
yeah, it was a mistake for sure, because you want that buffer, right? So you want somebody else to represent you, somebody who's licensed, who's not going to lie on your behalf or anything like that. And we went, and the auditor, and this was a designer, a clothing designer. She used to be, she used to have runways and Fashion Week and all of that. And it was fun. So she was freelancing at that point. And even though one of the things that I usually talk about at year end is receipts, technically by law, you're required to keep receipts. However, the IRS has been accepting credit card statements for decades instead of receipts. So this woman had credit card statements and she brought it with her, and the auditor was looking through it in front of us. And she stops at a clothing store and she says, why are you buying clothing? And my friend says, well, because I'm a designer. We buy a popular piece, we take it apart, and see how it's made. And we make something similar.
Uh-huh.
And the auditor goes, that is the correct answer.
Wow. Wow.
So you want to be prepared. You want somebody else to be there to say, you know what? I'm going to check with my client. Let me check. Let me get back to you on that. Because if you just go by yourself, you have no buffer like that.
Yeah. And you won't know why they made that purchase in a clothing store. But this was that, that explanation, which totally makes sense, because that's why we as entrepreneurs, even, I've done this with music scores, with analyzation, with, all of this as a writer. This is exactly what you do. And with some of that. So that's interesting. I've not written all of them off. I'm thinking, boy, I could have written off more. So but yeah, but that is a really good summation of that. So good. Well, I'm really glad you explained that, the Bill of Rights, and for us to have confidence in that it was written for us. It was actually written not as a, something that would give us panic, but things that would protect us by our IRS. And so hopefully we'd be able to remember that if that ever happens, and to be able to keep from being flagged as much as possible. And, my husband works because he's been in this area for a long time, but he's very, very aware of that because he's had to work with clients before on that too. So, well, and I had another question here for you. Are we okay with just our CPA? I mean, you do such specific things in what you were doing. And what else do I need if I'm an entrepreneur? If I have a CPA, if I'm doing accounting, what else do I need for tax planning?
So generally speaking, traditional accountants who put a tax return as their product of work, traditionally, they don't actually do any tax planning for you. The typical scenario you would encounter would be, somebody was telling me about this. You're asking, let's say you're talking to somebody like me, and then the client says to their CPA, why aren't we doing this? And the CPA goes, oh, we can do it. So that's the typical scenario that I see. When I talk about this, I typically say, in order to work with us, you don't have to leave your current accountant. And the reason is that we can do some tax planning for you. We can implement it. So the first step is usually to design a plan. And usually it's not a fully comprehensive plan, because as we work through the implementation, we find other things that we can do for you. And so design and then implementing the plan, creating templates, creating strategies, reorganizing, potentially restructuring the entity level setup, because usually just with a simple entity split in a couple of different ways, you can save, a couple of, I don't know, 10, 20,000 bucks a year, federal tax alone. And I always look for federal tax first because it's a higher tax anyway. And so then we implement, and you can go back to your CPA. Typically, I don't know if you know this, and it's going to actually get worse, and it's going to get worse really quickly, because right now, as of, I think we did the research 10 years, the data was about 10 years old, is about 10 years old. We did research in 2016 or 2018, I can't remember. But we found that there's a ratio of about 916 clients per tax preparer. And this is only counting people who, not per tax preparer, per tax firm. Okay. Including one-person firms. And that's only counting people who use someone to do their taxes. It does not count people who self-prepare. So if you, and I've seen most practices anywhere from 300-400 per owner who has some help potentially, to 700 to 750 when they try to do it all by themselves or with help or whatever. And if you think about it, if you're one of 916, wow, nobody has an extra minute a year to spend thinking about how to save you money on tax. It's just not possible. There's not enough time.
Right. Wow. That's a really astronomical kind of fact there. Yeah, it's like as I equate some of the jobs with trades, and not as many people are going into like being a plumber or being a whatever, one of those workers. And they are in demand. And right now, plumbers are making a lot of money because of supply and demand. And now we're finding more people starting to think about, oh, well, that could be a job. I don't need to go to law school or, whatever, but, because I enjoy working with my hands, or, I enjoy doing, certain parts of that. So, yeah, that's amazing that you said that, sort of statistics. So it'll be interesting after this, people going, well, maybe that's a field that my kids can go through to do.
No, it's actually, I do a lot of thinking and reading on this because it's been going on for a few years, but
yes,
75% of today's members of the AICPA, and I know it's not counting the enrolled agents and stuff, which is fine, but 75% of people who are AICPA members are over the retirement age today. And over the past 5 years, enrollment in CPA licensure, first-time licensing has fallen 33%, which is insane.
wow.
So AI will supplement some of it, but technology will supplement some of it. But we're looking at a huge accountant crisis because the reason is, and I don't know if like somebody will, listen to this and think as to what you said, maybe my kids should be an accountant, maybe. But the problem is that younger generation, and I know, from our nephews, they don't no longer want slaving, pardon my language, but slaving for an accounting firm for 80, 100 hours a week, sacrificing health, life, and everything. They don't want that anymore.
Right. Right. Yeah, you're right. You're right. They want to be able to work remotely. They want to be able to, we have an attorney's son. He wants to be able to keep remote, he's got an ideal job actually, because he can work remotely and he's in a specific area. But we've got another son who's a fireman. He's got to be on the job. I mean, you've got certain people in jobs that they have to be there, construction workers, they have to be there. Nobody's going to build a house, even if you're using some prefab, you got to have a good contractor. You've got to have good workers. So yeah, there's a certain amount of that. So developing the love for it, developing, also, there's a certain amount, and this I've told artists this as well. Somebody going into the visual arts, wanting to be an artist, and I said, well, they better learn how to use AI along with their art, because a lot of it's going to be able to you're going to be able to partner with it, unless you want to live in your car. It's a fact. Of a working artist is going to be living in unless you really have something breaking through. But there has to be some sort of a companion to that to be able to help push that field forward. And the person that will end up doing really well through it is the person that figured out how to educate those people and how to combine that with the digital tools that we have today. And so you don't have to work that many hours, and now you can get the same sort of results with the same sort of accuracy. So that's a challenge. So whoever's listening to this thinking, ooh, that sounds interesting. Well, I've given you a great idea. So but a lot of fields are going to be like this. So anyway, but yeah, it's a definite issue. So thank you for bringing that up though, too, because there's a lot of fields that are facing this. So,
yeah. I mean, think about it this way right now. And I looked at this up last week because I was finishing an opinion article on the accounting industry, because accounting industry seems to see the solution to this crisis, not to change themselves, but to actually make other people change. So they're dumbing down the requirements now for the CPA licensure. As opposed to changing the way we do business, work people less, let them work 40 hours a week.
Right. I agree. Don't dumb it down. I've talked to instructors, college instructors, English instructors. They can't even, their students are coming in, they're dumbing it down. They can't even write a simple essay anymore, that sort of thing, because they keep dumbing it down for either the teachers or the work hours, or to be able to read whatever. You don't want to have to read those stacks of papers anymore. So really, really good point. So yeah, I think that's a real cautionary for anybody that even has somebody doing their work. It's a real cautionary tale there of how much does your expertise, or your expert, I should say, you want to kind of look at their background a little bit. So I never shy away from using somebody that's a little older or has a little more experience because of their training and all of that. So, well, you've gone into some of this, and I kind of want you to expand on it. Now, you were a part of our halftime success resources as well. So in finances and some of your courses, you have some wonderful things to offer. But what special training do you have? And you've told us about that, a little bit of what you have, but can help us with our tax planning. If somebody is listening to this and they say, Tatiana sounds like there's something that she does that I think I need. So how should they evaluate how you can help them?
So I'm just going to share a few things that are good to be done before the year is over. Just good to think about it, and that, as you think about it, I always think about how do we make what's not deductible really deductible? So I'll share some values so that you can see kind of some of the basics. And these are extreme basics, like foundational stuff, right? The stuff that we do every day is much more complicated than that. But something that you can start thinking about, even if you're just a small business, freelancing maybe, or whatever, it can help you. So number one is have really good accounting, right? The bookkeeping. And the reason is that if you have clean books that are reconciled, that there's no commingling of funds, and commingling of funds is when you pay business stuff with personal cards and vice versa. It's a big no-no for the IRS. They don't like it. They will assume everything is personal, and then it's up to you to prove that it's business. So definitely a good idea. Always will help you pay the right amount of tax. What I used to, when I was traditional accountant, people would say, "Oh, why?" When they would do their own bookkeeping, or they would have a bookkeeper that is great, they would say, "Why do I owe this much? Where did the money go?" And the answer to that often was bad bookkeeping. That's what it is. So when you have good books, timely when well done, you will pay less tax, I guarantee it. And also, it will be less of an audit flag. The other thing is I mentioned about receipts, right? So I don't want to say you don't need to keep receipts, because by law you do, but reality is that save the bank statements, know exactly how much you spend on the home stuff, like if you use your personal car for business, if you use your home for business, there are ways to take a home office deduction that's atypical from what traditional accountants make you take. And traditionally, if you're self-employed, if you have a Schedule C, maybe it's a sole proprietorship or a single member LLC, you actually would need to, if you own the home, you would need to depreciate it. And the problem is, when you depreciate it, if you ever sell it, you will pay tax on that portion of depreciated property. So nobody wants that, but there are legal ways to go around it without having to depreciate your home. But for that, you need to keep receipts. So keep receipts of your property tax, keep receipts of your insurance for the home, landscaping. And again, credit card statements is fine. Just make sure you have a nice, clean total for the year. Mm-hmm. And then also kind of bringing your books to date before the year is over. Extremely important, a really basic thing, but I do feel like a lot of people miss that. And the reason is this, when by the end of November, for example, or actually, let's say by November 15th, and then there's a reason for it. By November 15th, if let's say, oh, I've made $70,000, let's say net. I've made, 100 and I had some expenses, blah, 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 whatever. The first checkpoint is that you're like, okay, does that make sense or no? And if the answer is no, where's the money? Then you start looking. Gives you time to clean things out, make sure that you're all ready. Because when you're doing that in March or April, The reality is that it's impossible to do a good job for you because people are busy. So they try to squeeze, fixing this stuff for you, and it's never going to be perfect. But then the second checkpoint is you look at, okay, what would that look like in tax?
Mm.
And then in November, you all of a sudden know, oh, I will owe, let's say $15,000. I'm making stuff up. In April, you're 5 months away. So you have time to set aside the money,
Right.
do something about it, and be ready for that. So it's just basic stuff, right? But then the real stuff happens, and I'm just going to explain very briefly. There's something called a cash basis accounting. And most small businesses, most freelancers are on cash basis, which means in order to claim income, the money has to make it into your account. And in order to claim the expense, the money has to make it out of your account. Simple. So that's why you will see, a lot of businesses and freelancers and stuff paying what they owe before the end of the year, because then they get to take the deduction. Now, the IRS has this thing called safe harbor. And for somebody who is on a cash basis, which again is pretty much every small business under $25 million in revenue, they can prepay up to 12 months of next year's expenses. And now I wouldn't probably go and prepay 12 months of rent, even though you can, business rent, for example. You could, but then what are you going to do next year? But I would prepay January because January is coming in 2-3 days, after December 31st. So if I prepay it this year, I'll take a deduction this year and I'll deal with the next year. And things like that. So insurance with certain exceptions and other expenses. But then also keep in mind this thing that a lot of people think about, or a lot of accountants tell clients, oh, if you are buying an equipment or a computer or whatever, do it before the year is over. It is good advice. However, on equipment, there are certain limits as to deductibility. If it's purchased in the fourth quarter of the year. And then for, let's say, computers or different like technology that people like to buy, let's say somebody has an old computer and they need to buy a new one, they buy it in December. Just watch the billing date, because here's the thing. And sometimes I recommend this to clients, but sometimes they don't listen. Generally speaking, you shouldn't be using a personal credit card for business. With a few exceptions, when it's impossible for someone to get a business card for their business, I allow them to use one designated card for business purposes. Nothing personal goes ever onto that card. The problem is that two problems actually. When you buy a computer, merchants in the US are not allowed to charge you until the item ships.
Yes.
So if you buy it on December 27th, but it doesn't ship until January 2nd, you're out of luck. You can't deduct it. Then if you're using a business credit card that has a business name on it and everything, you're fine. As long as it's charged before December 31st, you're good to go. But if you're using a personal designated card, then you can only deduct it if you've paid off the card. So there's a special rule in that. And of course, all their renovations and improvements and other things to business property, like you want to redo your home office and stuff, do that before the year is over. It will serve you well in tax time. And the safe harbor procedure for the IRS, it covers prepayments that I've mentioned before, prepaying stuff that's coming up anyway in January, February, or whatever. But it also covers this thing called stopping the billing. For example, you're on December 1st, you need to bill your clients, and you have a choice to make. Maybe it's December 15th, and you have a choice to make. Do I want to bill them so that I give them a chance to pay before the end of the year and I'll report that income? Do I need the money? Or can I wait until January 1st, bill them then, or December 27th, and let them pay me in the new year and then report the income later? So you kind of know better what's coming up for you. Maybe next year's promising to be much better. Okay, then maybe you pick up more income this year. So kind of knowing that, knowledge is power, right? So knowing that ahead of time and thinking about it ahead of time can save you a ton of money in tax time.
Such wise advice. Knowledge is power, yes. And this is, again, really know where you're at as much as possible, even if you're not an accountant or a money person, but all of us should be knowing where we're at, period. Even if we've got those that are taking care of the finances, we should at least, look at the numbers, look at the data. I mean, data is huge right now too. It's the same thing. So great advice. So, well, you've written a book and a beautiful book, actually. And why did you do that? And, how will it help us? Because I will put, of course, your links to how people can reach you. And of course, they'll see all of that on your website as well. But how can your book, what is that all about? And how can it help those that are listening?
Well, the book is called Dream Bold, Start Smart. And the book is for someone who has a business idea and cannot afford to fail. So it's a roadmap on starting a business from a money, numbers, and tax perspective in plain English. And the reason I wrote the book, and I started writing it in 2019. And basically by then I had 15 years of accounting experience and tax experience working with small businesses. And that's when I've realized that I can no longer serve them directly, simply because for my expertise, they generally speaking don't have a budget. The little small guys, somebody who's just starting out, but they really need the expertise. And so I figured, I will contribute to reversing that trend of 50% businesses failing within 5 years. I will at least contribute to maybe reversing it a little bit by writing a book of what you can do to prevent failure in your business when you cannot really afford to fail. So this is more of my way of helping those early entrepreneurs or almost preneurs to start and do it better than others.
What a great, I like that great why of your purpose of the book, because I've read the book but just to know in the background of, I wrote this book because, and a lot of us write books because, why would I write it otherwise? You want people to be able to move from point A to point B. So that's a great reason, and it's interesting reading, and to be able to follow some of those principles is really great, especially from the expertise, the plain English. It's not financial gobbledygook to try to go through, make your eyes cross, and some of those types of books. So, Tatiana, this has been just absolute. I know we could keep talking. There's a lot of other things that we could talk about. But you covered so many of the basics today, especially of end of the year planning, how important that is. If somebody was going to walk away with one thing today, or maybe two things, but one thing to say, here, I listened to this podcast and, honey, this is what I heard. If you're talking to a spouse, or this is what I need to do. What would they say from the outcome of this? What would you like them to do first?
I think the takeaway here is more along the lines of taxes is not a once a year event. That's really the mindset shift that hopefully people walk away with after listening to this. But just get your accounting done and ready and look at it. Understand where you are. Because, I call my book a roadmap. And my second book that I'm working on is actually, I use the driving metaphor a lot too, kind of a car on the road. And it's impossible to know where you're going if you don't know where you are.
Yes.
So that's probably the takeaway that I would leave everyone with.
That great advice. And I love the driving advice because I always say Siri has helped a lot of marriages. It's helped, I hate giving directions. But if you are specific in being able to tell an application like the Google Maps or like Map, whatever, it will get you there. If you are specific about knowing where you are financially and what you need to do in the future, you'll be able to plan ahead and probably do better planning, save money in the long run, and use the tax code to your advantage. So, well, how can people contact you? Of course, I will put all the links in this podcast as well as on our Halftime Success. Make sure you get there, halftimesuccess.com. So how can they get a hold of you, Tatiana?
I think the fastest way to connect is to call or email. Both of those are on the website. You can go to linzacpa.com. I'll give you the link to put in notes. I live on Instagram. I'm now apparently on Snapchat because I have a preteen. And I'm certainly on LinkedIn. So any one of those.
Oh, great. That's great. Yeah. All those links will be there so people can follow up with that. Yeah. Isn't that something? I mean, I have to look at certain because now, I've grown children, but my daughters-in-laws and their families, they're on different sites. So I'm there now, so to be able to check in, at least kind of seeing what's going on with them or seeing the new pictures or whatever. So, well, this has been a delight. Again, for everyone, and you can check out even some of your courses. Those will be available. And I will have those on, I do have those on halftimesuccess.com. And to make sure you're getting, there will be an article with this as well. I don't always write an article about along with every guest about their content, but it's expanded on. Usually I expanded on what we've talked about with some other resources, yours included. So make sure you're getting that, goalsforyourlife.com/newsletter. I have a lot of websites, so you can get a number of places. They will all link to each other, whether it's music or speaking. So thank you again, Tatiana, for being with us today. I just so enjoyed, and the timing of this is perfect. Those listening are going to go, oh, I might be too late. No, you're not too late. As this is coming out, just pay attention and be proactive. That's one thing I was really took from our conversation as well. I'm trying to be better with that on my own as well, because I'm not a financial person. I give all those numbers to my husband, but I need to even be more proactive in my own record keeping. I know that. I end up scrambling is what I do. I scramble. So, oh no, I'm behind. So, we all do that in many ways, but it's a good reminder. So thank you again so much, Tatiana. And thank you all for listening to us all the way to the very end. Make sure if you are listening to the podcast, make sure you also click into the YouTube or into our articles. So thanks again for being with us, Tatiana. And for everyone else, I will look forward to being with you again next time. So bye-bye for now. Bye. Thank you for joining us. It is because of our wonderful listeners like you that we keep going strong week after week. We'd love it if you'd share and follow us to not miss a single show and even write a review. You can also find all of our articles, products, and links at womenathalftime.com.